it's not just possible, it's by breaking it down, it can actually be easy, achievable, and it's what's helped transform my portfolio and take it to the next level. So it gives you those units of cash flow, equity, and growth that I love talking about. You term that the 3 C's, and I just hope this can help some of the investors starting their journey.
Today, we are joined by David Webburn, a professional property investor and seasoned property development expert. David has completed over 700 dwellings since leaving commercial law, having worked at leading professional service firms. He is the best-selling author of Invest and Prosper with property published by Penguin Random House, past president and now life member of the Auckland Property Investors Association, and is highly sought after by the media for his opinion in all property matters. So David, what's the first thing someone should know when they decide to invest in property?
Well, thanks for having me, Danny. The first step is to establish your strategy. What are you going to do with the land? Are you going to develop it to sell, or are you going to develop it to hold? The build-to-rent strategy. So once you've established that, you need to do the numbers. Having that comprehensive feasibility study done really helps you for the purpose as well, because there are going to be various inputs: your professional fees, your consenting fees, any council development or financial contributions and charges and levies that they've got, the actual construction costs, your finance costs there. So knowing what all of these cost inputs are just so critical to determine if your project is viable or not. If you're going to develop to hold, great. What's the cash flow going to be like? So then when you've worked out the costs, you can actually work out what your surplus cash flow is going to be, because you want to, if you're going to do a building project, you want to have more money in the back pocket at the end of the month than you had at the start, right?
Yeah, well, that sounds a lot of work, David. So tell us, what this feasibility report or this work that needs to be done needs to include?
So you're going to look at what's going on in the market. What are some of the other houses in the area selling for? So that's going to be what they are likely to value at as well. You're going to look at what the zones are in terms of the planning rules, and you're going to look at the time frame for doing this, and also talking in with your financial advisor so you can check that you've got the borrowing capacity and the ability to actually execute such a project. I always make sure that I get in touch with a surveyor, talking with my architects and town planners, just to make sure that I can do everything. Talk to property managers that are expert in the areas as well, so then I can actually know what's going on. I can get the numbers to a high degree of accuracy. And sometimes I do that very quickly on the back of an envelope, just as a big picture to see if it's worth actually exploring that or not. And usually it is, and then I will go ahead and actually prepare a detailed financial feasibility analysis.
The feasibility has done, you have talked to the power team and your main contacts. What's next from there? What else do you need to do?
Yeah, well, sure. So it gets split into 2 parts. If you already own the land, it becomes a clearer path because you don't need to acquire the site. If you don't own it, you're going to have to complete your legal due diligence checks, working with your lawyer and things like the LIM report, any building inspection reports that you may wish to do, grabbing a property file or such like. So once you've got that done and you've decided to go ahead and buy the site, or if you already own it, then you're going to get a topographical survey. A topographical survey is the canvas that the architect, as the artist, can paint a picture on. So those inputs will then be able to be done accurately. You'll be able to draw a study, like a scheme or concept plan, and that'll sort of measure out where the house is going to be, what kind of floor plan it's got. And that's where you might want to just be careful with the architects, because some of them are a bit naughty and build very big dwellings with long hallways and massive as bedrooms that you're not going to get much extra rent for, but they can cost you tens, if not over $100,000 to build, and waste money on that. You may need to talk to a planning consultant to talk about things like building coverage, site coverage, height in relation to boundary and other site constraints, and working with engineers on drainage and other matters.
Yeah, so that all sounds a bit complex if you have never done this before. And you've mentioned all the different professionals that are involved. So how important it is to have the team of professionals around you to make sure you're successful at that stage.
Absolutely, Dan. It's critical to have the right team. You've got to be able to work in with them, got to be able to make sure that they know the laws, and to make sure that you're not going to overbuild or waste money on them. And at the end of the day, the teams that I use are great. I've worked with them on a number of times before and built that trust there. And for some projects, their team might need to change there because there's some specialties within that, but it's really critical to do it because you can't be an expert in everything.
Well, and then around regulations, obviously you can have a big dream of building, I don't know, 12 dwelling in a 500 square meter site. But going back to the regulations, what is important for you to know and how does it affect what you can and cannot do?
Absolutely. It's really important to know what the planning zones are because sometimes you're in absolute fantasy land of what you can do. Sometimes see people trying to get extra stories out of that. It's just not that easy. It's going to be not cost effective for you to try to do that. It's other times you're going to be breaching things like building or site coverage in terms of the actual square metres of area there, and that's important for stormwater. And as we saw in Auckland with some of the flooding events, those sites that had more concrete on them, that can cause some issues with the impervious surface area. So just have to work in with your professionals to check what you can and cannot do. It's really, really important. In some cases, you won't need to go and actually do a subdivision consent. You might not need a resource consent at all. So you might just be okay to do it with the building consent. But on all medium-sized or major projects, of course, you're going to need to get some expert planning advice as well. And that's where you might have to submit assessments of environmental effects, basically comprehensive reports to confirm that you're compliant with regulations and not adversely impacting the neighbourhood or indeed the wider community. So basically talk to your professional team to get that done because the planning rules are really, really critical and they do vary between areas quite a bit.
Yeah, it's a lot to keep in mind. And obviously, when you start doing all this, you mentioned all the different reports that you need to get done. It involves a lot of money. So what about financing? At what point the developer needs to think, okay, now it's time to go and talk to an advisor to see if I can actually pursue this project?
Yeah, great question, Danny, because sometimes the financing is easy, but sometimes a bit tricky there. It depends on your own personal situation, but you should always work in with your financial advisor or mortgage broker to make sure that you've got the ability to complete the project. Bear in mind that it can be a bit of a risk. Not everything goes straight forward for it, and construction loans aren't always every lender's cup of tea as well. So it may be an option to, for the short term, use some second-tier financing before refinancing to a main bank because your project's going to give you some outstanding cash flow and equity gains because you're doing it to make money. So if you can grow both your cash flow and your equity, that's surely a good thing to do.
Yeah, and it can sound like a bit challenging for a new developer or someone that has been land banking on a property and now decide to go ahead.
Yes.
Do you have any special advice for like next steps for someone that's in that situation listening right now?
Yeah, I do. I think it's important to remain flexible because a lot can happen in development. Making sure that you're getting the right plans comes from the strategy. Your development strategy is only as good as your borrowing strategy, so you need to have that in place. You need to have a property plan, and you need to work in with your financial advisor to make sure that's achievable. And then take advice from your professionals, listen to them, and you're paying them money, so don't tell them exactly what to do. Ask them what they would consider doing as well. And then I think you'll get a good result. And another one, probably make sure that you have a contingency. Why? Because very rarely do projects go exactly on plan, on time, and on budget. So by having a contingency fee, that can cover for any adverse things that happen, such as cost buyouts or time frame buyouts, then you're able to dip into that contingency fund without having a lot of stress later on.
Wow, that's all great advice. Thank you so much for sharing your knowledge today, David. And to be honest, it sounds like a lot, but if you break it down, I assume into small little pieces of milestones, like you've done it, 700 dwellings, so it is definitely possible.
It's not just possible. It's by breaking it down, it can actually be easy achievable, and it's what's helped transform my portfolio and take it to the next level. So it gives you those units of cash flow, equity, and growth that I love talking about. You term that the 3 Cs, and I just hope this can help some of the investors starting their journey out with this, if they can just have a little, small insight for it.
Beautiful. Yeah, that's the magic formula. And to all our listeners, thank you for joining us today. Make sure that you smash that subscribe button. And if you have any questions for David, comment below, let us know, and then we can bring him back on the podcast and you can all ask more questions. So until next time. Financial